morning, everyone, and welcome to our first 2021 Bank on Washington Coffee Hour. I am Becky House, Bank on Washington Chair and Board Member of the Financial Empowerment Network. I'd like to start this morning's chat by recognizing that in Washington, we have had up to 10 active local bank on coalitions, each local coalition sharing leadership with a local asset building coalition, and who have varied degree engagement under COVID-19. With that in mind, in late March to mid-April, we're going to bring in some of our national colleagues to join us in offering a workshop on coalition building. This morning, I'd also like to recognize our local coalitions and their current leadership. So we have Bank on Cowlitz, Liz Minty, Bank on Seattle-King County would be myself and Alice Cody, Bank on Kitsap, Mallory Blackwell, Bank on Mason, Emily Hearn and Jennifer Duncan, Bank on Tacoma Pierce County, Brian Flint, Bank on Spokane, Kathy Weingar and Audrey Mischenko, Bank on North Sound, Skagit, Snohomish and Whatcom, Lisa Sony, Ryan Davis and Jared Shapiro, Bank on Thurston, Myra Pena, Bank on Walla Walla, Barbara Maxwell, and Bank on Yakima, Donna Hatton. The heart of Bank On is about the collaboration that brings public, private, and nonprofit partners together to break down the silos. After all, we can do so much more together than we can do on our own as one. Now, again, we have a diverse group today, and we're thrilled to see the registration included members of government, banks, and credit unions, and our nonprofit partners. Thank you so much for joining us. Today, we're going to focus on the Community Reinvestment Act, or the CRA, a United States federal law that's designed to encourage commercial banks and savings associates to help meet the needs of borrowers in all segments of their communities, including low and moderate income neighborhoods. Congress passed the act in 1977 to reduce discriminatory credit practices against low-income neighborhoods, a practice known as redlining. It authorizes the banking regulators, the Federal Reserve, the Federal Deposit Insurance Corporation, and the Office of the Comptroller of the Currency to evaluate banks on how well they meet the credit and the banking needs in the communities they serve, including low and moderate income neighborhoods. Today, you're going to learn more about the proposed modernization of the CRA. So without further ado, joining us today is Frank Woodruff, Executive Director of the National Alliance of Community Development Associations, and Mallory Van Abena, Policy and Advocacy Manager for the Housing Development Consortium. Frank joined the NACEDA in September 2010, becoming Executive Director in January 2012. He's dedicated to addressing the challenges and opportunities facing our country's low and moderate income communities. Frank holds an Executive Education Certificate from the Harvard Kennedy School of Government, an MA in Public Policy from George Washington University, and a BA from the University of Wisconsin-Madison. His publications include the Mortgage Interest Deduction, an example of upside-down federal government housing subsidy, Transforming Community Development through Arts and Culture, State Policy Innovations to Support Creative Placemaking, which was published in the Community Development Innovation Review of the Federal Reserve Bank of San Francisco, and he's co-authored 2 essays entitled Redlining, which were published in the American Middle Class, an Economic Encyclopedia of Progress and Poverty in the Wiley Blackwell Encyclopedia of Urban and Regional Studies. Mallory brings her experience in direct social services, advocacy, and community organizing to her role as Policy and Advocacy Manager at the Housing Development Consortium of Seattle-King County. In this role, she works alongside community partners, Housing Development Consortium members, and the public to support jurisdictions across King County as they work to meet the affordable housing needs of all residents, regardless of household income. Mallory holds a BA and an MA in social work with a focus on administration and policy practice from the University of Washington. So I'd like to welcome both of you, and I'm going to hand it over to Frank to get us started on today's conversation.
Thanks, Becky. I appreciate it. Welcome, everyone. Good to be here with everyone. Could you go to our first slide, please, Becky? NACEDA, we are an organization that generally looks at public policy issues through the lens of the priorities of smaller to medium-sized community development and affordable housing organizations. And when it comes to the Community Reinvestment Act, no different. I'm going to try today to give a high-level overview of what CRA is, and this will probably be pretty basic for us, at least some in the room. But I'm going to give a high-level overview of what CRA is, what the different regulators are thinking about transforming it into. Throughout this, you're going to see the flavor, right? Because that's the way we look at things. But I'm going to try to make it relevant to this audience, which I'm a little less familiar with. But we'll have plenty of time to adjust along the way. And of course, I think having done this type of presentation a couple times the last year, what everyone kind of likes to talk about generally is like, okay, Frank, we get what CRA is, but what are the politics? Like, what's going to happen over the next year or two? And I will throw spaghetti at the wall and can answer that question with a lot of confidence, but not a lot of certainty, if that makes sense. And when we get there. So if you go to the next slide, please, Becky. I'm going to give a brief history of the overview of redlining. I think Becky kind of did that already. I'll keep that brief. Talk about again where CRA is today, what's been proposed by regulators, and a little bit of what the next year brings. If you go to the next slide, please. So real briefly, redlining is defined as the practice of financial institutions, particularly mortgage lenders, of systematically denying credit to certain neighborhoods or providing credit to those areas on unfavorable terms for reasons unrelated to the creditworthiness of area residents. The name redlining comes from the act of literally drawing a red line on maps to delineate where credit was or was to be made not available or made available on more stringent terms. Historically has been practiced most commonly in minority neighborhoods. What's maybe somewhat less known is that redlining was initially a practice of the federal government back in the 1920s and 30s, and then adopted by the financial industry. And then made explicitly illegal, as Becky said, in 1977. The one small piece of the of CRA that I think it's important to keep in mind that wasn't mentioned is that CRA doesn't just encourage banks to provide lending and services and credit to meet the credit needs of low-income neighborhoods. It requires it. It's a stick, not a carrot. In other words, the federal government says to banks, you will do this or else. Or else we will not allow you to merge. We will not allow you to open new banking products. I mean, they can take it a long way. So that's just one piece of the definition that Becky read out earlier that I would add. So if we can go to the next slide. So what is CRA today? So really, really basics. CRA says that financial institutions that you have to provide lending, investments, and services around where you have physical bank branches. Those areas around branches are called assessment areas. And every 3 years or thereabouts, the federal government, one of the 3 regulators, which I'll go through here in a second, examines banks throughout the country to make sure that they are doing that. And if they are rated on anywhere from an outstanding to a failing grade. And if they are in some of the bottom part, if they're in some of the grades that are lower on the scale, so to speak, they can be denied merger requests, they can be denied any number of benefits that come with having federally insured deposits. Lending is defined as basically what it sounds like. If they are providing mortgage loans, small business loans, make sure that they are being they're not being geographically targeted towards one area and not another. That they are making investments, namely community development-oriented investments in affordable housing, for example, or many other types of activities in low-income areas. And that they are providing services. Services can commonly be thought of as like volunteer hours, but also under the services test fall currently like the regulators consider things like free checking accounts and other types of services that the bank offers beyond service hours and volunteer hours. Now, in this context, basically what regulators try to do in a bank examination is look at distribution of the lending, as I mentioned before, but also consider the performance context in which those lending, investment, and services are deployed. So they look at what the community needs are. Is there an affordable housing need? Is the bank attempting to address that affordable housing need? Is the economy really, really hot, or is it are we in a recession? That will impact how examiners will grade a bank. So there are, it's a pretty holistic process, but it has challenges, which we'll get here in a second. If we go to the next slide. Before we get to the challenges, I think what's important to keep in mind right now is how CRA is, how rules related to CRA are promulgated, and how examining agencies, regulating agencies work together. A couple things to keep in mind. CRA is a very, very short statute. There is not a lot that Congress has said to the regulators, you must do this as part of CRA. Regulators have a lot of discretion as to how to implement the Community Reinvestment Act. And that any given law that's changed, or sorry, that's passed, weights power more towards Congress and the language that they passed, or more towards regulators or implementing agencies and the discretion they have. As CRA, or as that dynamic goes, CRA very, very heavily weights power towards the regulators. I think that's important to keep in mind. The three regulators are the OCC, the Office of the Comptroller of the Currency, the Federal Reserve, and the FDIC. The OCC is typically kind of big brother, so to speak. They are typically the lead agency on any kind of group activity, though, as it was pointed out to me, each of the three regulators, each has their own set of CRA regulations, except it just happened until last year, they all happen to be exactly the same, which is important to keep in mind. The oversight committees are the House Financial Services Committee in the Congress, and the Senate Banking Committee in the Senate. The last time there was a coordinated update, again, all three regulators getting on the same page about CRA was 1995. And that was the case until last year when the OCC passed its own revised CRA rule without the participation of the other two entities, which is very, very messy. No one wants that. The banks don't want it. Community groups don't want it. One of the primary goals for CRA reform is to make it clearer and more standardized and more quantitative, and that the OCC going alone flies in the face of that. But there was a final rule passed last year. But before that, all the regulating agencies, for the most part, had always acted together. Let's go to the next slide, I think, please, Becky. So the question is, why did the OCC take this up? And why did the Federal Reserve take it up as well? So as I said, the OCC finalized a rule in May of 2020. So what is that, 9 months ago, by itself, without the others. Fast forward on the end of 2020, maybe December, January, the Federal Reserve then starts up its own process to update CRA. There's a lot of politics involved in that. It's fun to have a beer over and kind of talk about how that all played out. As if you're a nerd like me, it's kind of fun to talk about. But basically, the Federal Reserve started its own process, not knowing the result in December of last year, not knowing what the results of the election were going to be. I'm sorry, it must have been October. It was before the election that they started up the process. So why are all these agencies taking this up now? Well, if you go to the next slide, please. As you may recall a few slides ago, the last time the rule was updated before 2020 was 1995. If we all think back to 1995, hopefully you all were alive then and not making me feel really old. That was before the internet, right? A lot has changed since 1995. The internet banking wasn't a thing in 1995, certainly not for the vast majority of Americans. So the question is, if banks' assessment areas and where they were regulated was only around physical branches, what about all the online banking activity? What do we do about that? Another thing in 1995 is that there were a lot more banks. There's been a lot of consolidation in the industry over the last 25 years and prior, right? And so the industry has changed quite a bit. There's been a call on behalf of low-income communities, in particular, but also others, that bank branches and where deposits are accepted are not the only places in which banks do business, and such as loan production offices, mortgage offices, and similar. And so that was part of the consideration as to why what to do about assessment areas and how the industry has changed is one of the things that regulators are trying to grapple with. That's a big one. The second is that currently banks only know if they get credit for an investment after they've made the investment, sometimes years after they've made the investment. And so there was a desire to get more certainty around what banks will get credit for investing for. And community groups as well, and advocates and nonprofit developers and investors, they want to have a little bit more certainty about what gets credit. Examiners, as I alluded to earlier, have a lot of discretion over the exam grades. They're very smart. The examiners are very smart people, except banks would sometimes complain that when they switched examiners from any given exam period, that different examiners were treating the same activity differently, and which made the tests inconsistent from their point of view. The Federal Reserve did a study of that and found out that that complaint is more bark than bite, although there's some truth to it. But nevertheless, there's been a desire to make exams more quantitative and like I said, consistent. So that's been another reason that regulators wanted to bring up CRA reform. And then given last year, this is something the OCC did not focus on as much or at all in its process prior to May of 2020. But given the events of this last year, one of the questions the Federal Reserve has is, can CRA explicitly address issues around race? Currently, CRA is mostly, at least explicitly, does not consider race. It uses proxy for race, such as concentrations of poverty, concentrations of poor health outcomes, that kind of thing. But it doesn't explicitly consider race in how it examines banks. And so the question is, should it, and if so, how? So all of that has built up to the OCC passing its final rule last year, and the Federal Reserve taking up an advance notice of proposed rulemaking this year. The advance notice of proposed rulemaking tried to grapple with a lot, and there's 99 questions as part of it. If you want to see NCEDA's kind of detailed letter, you can go to the website on the slide, nceda.org/CRA. There's a lot of detail there. But the big questions that the regulators tried to address more or less fell around these four core concepts. I will say that there's a lot of disagreement, but mostly technical disagreement about the second, third, and fourth lines here on your screen. The first one, I think, is the hardest to deal with. It seems straightforward, and it's the most kind of easy to grasp challenge with CRA, that the internet, how is the internet affecting branches and banks, and therefore how is it affecting communities, is a really core question, easy to wrap your head around. It's really hard to figure out from a regulatory point of view. So that one I'm probably most curious about seeing how it turns out. The second one, I'm sorry, I'm bouncing around a little bit, but the second one about how banks get certainty about their investments is one that NCEDA has focused on the most. We thought the OCC got this one very, very wrong, and the Federal Reserve was also going in the wrong direction. Both have proposed a list of activities produced by regulators that would be approved for CRA credit. NCEDA thinks that, inserting a list of approved regulator-approved activities flies in the face of banks working with communities to identify community needs. In other words, is a bank CRA officer going to want to sit through 3 to 4 months of community meetings to decide what the community needs, or it'd be easier if they just pick something from a list from the regulator? We think the adoption of a list of activities is problematic for that reason, and it's something that NCEDA is focusing on. I'll wrap up here in a second. The comment period ended on February 16th last week for the Federal Reserve. There's going to be another one perhaps by the end of the year, which I'll come back to. Could you go to the next slide, please, Becky? These are 3 questions that I picked out of the Federal Reserve's process that I thought would be particularly relevant to this audience. I'm guessing a little bit here. This isn't exactly my audience, but I think these are questions the Federal Reserve asked, and frankly, the OCC asked before, that I thought this audience would be particularly interested in. And so I won't go through them, but if we want to tackle any of these in the Q&A, certainly willing to do that with you all. If you go to the next slide, please, Becky. So as I said, the Federal Reserve just had a comment period ended last week. We suggest, or we anticipate that they will go to the next stage of the regulatory process and propose a rule by the end of the year. It's a little bit of a guess, we'll see, but I would guess by the end of 2021 they'll do that. NCEDA will continue to watch it and be interested as we have throughout the process. The big question, I think, politically is now that the White House has switched hands and the OCC has switched hands, and the political dynamic is very different than it was a few months ago. Will the OCC do some form of discarding their previous rule and come on board with the Fed so that there is a united front among regulating agencies? That's an open question, and we shall see if that's going to happen. That's one big question we're watching. So next slide, please, Becky. That's all I really had. If you have any questions about any of this, I love talking this stuff. Feel free to email me. As I said, we have regular updates at nceda.org/CRA. Becky, if you wouldn't mind pulling up Mallory's slides. These, mine are finished. I would say as Becky pulls those up, you know, this is all like fine and dandy and everything, that these questions are being asked in Washington, D.C. What's a little bit missing from this process so far is both in terms of the regulatory process, but also this webinar, is how is this playing out in Washington State, and particularly the greater Seattle-King County area. So we brought in a resident expert on that topic, and Mallory Blackwell from HDC, and I'll pass it off to you, Mallory.
Thank you, Frank. Resident expert. I'll try to live up to that expectation. So hello, everyone. Thank you so much for having me here today. My name is Mallory Van Albema. I serve as the Policy and Advocacy Manager for the Housing Development Consortium of Seattle-King County, or HDC. So as Frank brought the NCEDA flavor, I'm going to be bringing a very prevalent King County affordable housing sector flavor to my section today. HDC is a nonprofit membership association, and we have nearly 200 organizational members working to meet the affordable housing needs of residents in King County. And we're one of 5 affordable housing consortia across the state of Washington. We're really proud to work alongside members to pursue a vision where all people have access to safe, healthy, and affordable housing in communities that provide them ample opportunity. So for today, I'm going to start with a very, very brief, I just want to stress it will be very brief overview of the current housing landscape in King County. And I'm sure many of you are aware of the affordability crisis that our region was facing pre-COVID, which has really been further strained by the pandemic. And I also recognize we have folks joining us today from many corners of the US who are probably navigating a similar reality when it comes to affordable housing. Then I just want to shift and touch really briefly on the real impact that CRA eligible investments have had within the Seattle metropolitan region. And then finally, I will wrap up with a couple of real life examples that highlight how federally insured financial institutions can support community development vision and work towards satisfaction of their CRA credit requirements. Next slide, please. Thank you. So over the past 20 years, the Puget Sound population has grown by over 700,000 people. It's essentially just another Seattle worth of folks who need housing that is affordable to them moving to the Puget Sound. Puget Sound Regional Council, which is kind of an intergovernmental body that helps support growth planning, estimates that 1.6 million more residents will live in this region by 2050. So we have just really substantial population growth in Puget Sound. Next slide. Pre-COVID, so I'll take all this data with a grain of salt. Obviously, the circumstances have changed quite a lot due to the pandemic, but pre-COVID, we were experiencing in King County extremely strong job growth. It led to a really strong surge in demand for housing. And there's just not a one-to-one relationship between jobs and needed housing units in any given year. Data shows that while housing production had picked up substantially, a low in 2011, the development of new housing units is just not keeping pace with job growth and was really only recently approaching pre-recession levels of production. So takeaway here is just since 2010, we've created nearly 4 jobs for every housing unit regionally. And this economic growth has really put a tighter squeeze on an already competitive market, both on the home ownership and rental side. Next slide. So as job and population growth has increased the demand for housing, costs have been driven up. And this is resulting in more and more families experiencing housing cost burden. And as Frank mentioned, the CRA was designed to undo the harm of redlining. And in my terms, I will say also known as racist lending practices. And I've included this slide to share that we continue to see clear evidence of racial disparities when you look at who is experiencing housing cost burden. More than half of all Black and Hispanic households in King County are considered cost burdened. And when I say that, I mean they're spending more than 30% of their household income on housing related costs. And we could spend a long time diving deeper into the details of the housing shortage that this specific region is navigating. But the key takeaway that I hope you all absorbed is that we have documented goals that we need hundreds of thousands of homes, additional homes needed within King County to ensure that no family is cost burdened. And we really need all hands on deck. The biggest hurdle to meeting the housing needs of King County residents is funding. And the most recent tax credit bond round, which is administered by our state's Housing Finance Commission, tax credits are the largest federal source of funding for affordable housing development. They received applications for funding that were totaling nearly $1 billion, and they only had $230 million to award. So it's a difficult situation, but I wanted to just note this, it's a bit of a silver lining as well, because while we don't have the commensurate resources to address the housing shortage in its entirety today, we do have an incredibly committed and tenacious and determined housing development sector in Washington state, and really in particular, a concentration in King County. So it's just really critical that financial institutions be key partners in this work, providing ample capital support for community development projects. Next slide, please. So this map is pretty tough to see on the slide, and I'll invite anyone who's interested to just access the link. It's embedded here. I know you can't see it on your screens, but I'll share these slides afterwards. So where do qualified activities count within King County? So Policy Map generated this helpful tool to show CRA eligible census tracts. So lending, loans, and services that are provided in these eligible areas can be considered for CRA performance credit. Most of the CRA eligible tracts in King County, south end of the county, which boasts the greatest ethnic, racial, and economic diversity of the county as a whole. And again, I'll share out a link so that you can move around. It's got data on the entire US. Next slide, please. So what does CRA lending value look like in King County? Well, quantifying CRA investments in the region from 2009 to 2018, I think it probably says, yep, okay. Sorry, I'm toggling between tabs here. 2009 to 2018. So CRA qualified lending delivered nearly $53 billion in mortgages to low and moderate income borrowers and neighborhoods, building intergenerational and community wealth. More than $8.5 billion in business loans to low and moderate income neighborhoods, really strengthening employment opportunities. And then over $7.5 billion in small business loans, increasing the vibrancy and resilience of local economies. And it's just been a really incredible investment for our community in King County. Next slide, please. So what kind of projects does CRA support in King County? Here you are seeing a CRA bank grant supported project like Village Gardens. This is a partnership between Homestead Community Land Trust, Africatown Community Land Trust, Edge Developers, the City of Seattle, and Heritage Bank. And upon completion, there will be 16 highly energy efficient townhomes available for purchase through a community land trust model. Affirmative marketing to reach those least likely to apply and encourage purchasing by those with historic ties to the area is also being conducted by this collaborative. and this collaboration and these partners have incredibly strong ties to the community. 10 of these homes are going to be available for purchase by families making between 60 and 80% of the area median income, with the remaining 6 being sold at market rate. And that market rate sale will then subsidize the cost reduction of the 60 to 80% AMI 10 townhomes. Another really cool element about this, and one that I think is just a strength of this project, is that subcontractors from Black-owned firms secured more than $1 million in contracts to advance this project. And this is just such a strong example of community being integral to an entire development's lifespan, from concept to, keys opening the front door. Next slide, please. So this is another example of what CRA can do in King County. The Liberty Bank building offers really beautiful and honestly poetic example of CRA bank grants and small business loans and what they can accomplish in concert with other funding sources. Liberty Bank was originally the first African-American owned bank west of the Mississippi and was established to provide banking services to Black community members in Seattle's historically Black neighborhood, the Central District, who had been excluded from traditional banking access or adequate banking access. So multiple organizations noticed that a bank that had moved in had vacated the parcel, and these organizations included Africatown Community Land Trust, the Black Community Impact Alliance, Community Roots Housing, and Bird Bar Place. And they worked for years to reclaim this space when it became vacant and partnered to create a hub with 115 units of affordable housing for families, family-size housing, making between 30 and 60% of the area median income, which is we have a huge gap of housing in that rung, and all rungs, but particularly below 60% AMI in King County. There are 3 retail spaces that are occupied by Black-owned small businesses on the ground floor, and there are multiple outdoor areas for residents and neighbors to enjoy. And this is what real community development should look like. Community leads, they have autonomy to name what is needed, and they accomplish it. Next slide, please. And then the final example that I want to share is El Centro de la Raza's Plaza Roberto Maestas. This was partially supported by CRA bank grants and located steps from the light rail station in Beacon Hill neighborhood in Seattle. This is a beautiful development that brought community vision to fruition. The design features work of local and international artists and really celebrates the Latinx community in Beacon Hill. Plaza Roberto Maestas is a center for community services, celebration, for living, for business and childcare, and partnership was so key in transforming this space. Enterprise Community Partners, which is a national organization, has a Northwest branch, and they focus on early learning and affordable housing. And in this project, they brought their expertise and supported the expansion of 7 classrooms to El Centro's nationally accredited Jose Marti Child Development Center. So there's childcare on site. You have 117 family-size units that were created, which family-size units are tough to create. It's expensive to build larger units. It's more revenue can come in when you can build smaller units in a complex. So the partners involved were very intentional about setting the course and recognizing that they had families that needed homes in their community, and they'd wanted to prevent more displacement of folks that had historically called that neighborhood of Beacon Hill home. And they have set-asides in those family-size units for households at the 30%, the 50%, and the 60% AMI. So there's a lot of ample gathering space for community. They have an industrial kitchen, and they're well equipped to host events. So they have a Dia de los Muertos event. They have lots of folks that come in and rent their space to use it for conferences and things of the like. And they have ground floor retail that supports small businesses. And actually the developer partner, Beacon Development Group, is sited within the building's office space just upstairs. So we just have 3 examples of, we have more. I wanted to limit my time, but we have 3 examples of community development projects that were created by and for the communities in which they're nested. Community-based organizations led the way on all 3 of these projects, pairing with development entities with the technical expertise to see it through. They secured funding from various sources, including CRA eligible investments from regional banks. And CRA can continue to have a really major impact on our communities. And we're just very intent about ensuring modernization remains responsive to the priorities that the community brings forward. And I think my last slide is just a thank you and my contact information. I would so be happy to talk about affordable housing in depth more, but that is it for me.
Thank you. Thank you both. That was really amazing. A lot of great information. And I'm wondering if you can talk a minute about how, you know, as a nonprofit, somebody coming from the nonprofit sector, what can we do to kind of further these causes, or, you know, get our voices heard in terms of what we think is important, or you know, in the CRA world and in the even in the housing development world, you know, how do these projects get started? I know this is a huge question, but it's like, wow, you know, you'd really like to be involved in something like this, but how do you connect a bank and your nonprofit and get the players to the table? I don't know.
You want to just take this one, Mallory?
I'm happy to bring, how do you get the banks and the nonprofit world and the community-based organizations in the same room to assess if there's something that they can do together. I can't really speak to the CRA side, but I'm sure that I can jump in there. We're a good nexus for that. HDC is a good nexus for that because we do represent financial institutions and the entirety of the affordable housing development world, and many, many community-based organizations as well, alongside the other consortia across the state. They have the same kind of composition of membership. And whatever, I'm not saying formal membership in HDC, although I would urge you to consider, but I also think that we are very willing to be a bridge between any interested parties that want to come together and can benefit from shared expertise, shared resources to bring a project forward. We talk with a lot of communities of faith and faith leaders in the King County region who are kind of assessing, we have a shrinking congregation, we have a huge parcel of land. What could we do to really evoke our values and have a wide impact on the community? Does that look like, what options do we have? And there's a lot of questions at that stage. So we are very grateful to be able to kind of step in and say, would it be helpful to talk with a developer? Would it be helpful to talk with a service partner? Do you want to deliver services on site? So I would highly suggest, reaching out to your local affordable housing consortia, or if you have an alliance of some sort that is statewide that can make those connections. We're here and we want to make those connections, and we want to see more housing being built, and we want to see all the housing that is out there that is safe and healthy be preserved as well. So I think just reaching out to those entities that are kind of a nexus of different cross-sector allies is helpful.
Yeah, and I would just add, to put a point out, another angle on what Mallory said, is that if you walk into a bank branch and say, hey, can I talk to the CRA person about this development project? They're probably gonna look at you with four eyes, because it is often the case, especially with the big banks, but even some smaller banks too, that the folks who are involved with CRA are somewhat separate from the retail branches and not always known. So as Mallory said, the advocates in the region or in the state are a really good stopping point. In terms of influencing the regulatory process in DC, there's two stages to the regulatory process. There's the advance notice of proposed rulemaking, which just ended last week for the Federal Reserve. Right. And then there's the notice of proposed rulemaking, which is where the agency will actually propose a rule. In the advance notice that ended last week, they asked a lot of questions. They had a 300-page document filled with questions. And so, but it wasn't a proposed rule. That's coming next. But when that window opens, they maybe before the end of the year, there will be an opportunity to comment. You can certainly take the lead from national organizations like NACIDA, who are submitting comments. The state and regional organizations like HDC will be submitting comments. And like I said, NACIDA's lens on CRA is about through the lens of the small to medium-sized CDC and the nonprofit developer. But there are other angles on it. There are banking associations. There are community reinvestment coalitions. There's a lot of different angles on it. You can certainly take the lead from some of those organizations as well.
That's great. Thank you. And if people haven't read, I read your article on redlining from the beginning of last year. And I mean, it was almost a little bit terrifying, to be honest. And I think that's a good thing for people to read. I was actually happy when I Googled the name of the person who was in charge of the OCC, and he's gone. So that was good news. But that leads me to one of the questions in the chat that some had asked.
Good stuff.
What is it? I don't know how you say her name. Mirsa Baradon? I'm saying it terribly, and I don't know.
That's pretty good, Becky. It's the question is, will Marisha Berardin get chosen to head the OCC? And for those that don't know, Marisha Berardin wrote the book, The Color of Money. And so, and yeah, there's been some in the news discussion about she may be in the running. That might be one for you, Frank.
Yeah, so as I understand it, it's between her and Michael Barr, a man named Michael Barr. She is known as the kind of the progressive choice of the two. I would say, I mean, I don't know the answer to that question. It'll be one of the two of those, I'm guessing. And if the pattern of appointments from the Biden administration holds, if I had to bet, I'd bet on Michael Barr, but I wouldn't be surprised by at least Barr either. But either one, though, I think it is worth noting that President Biden, when he was campaigning, made CRA a campaign issue to throw out the OCC's rule that was passed in 2020. And that's a political dynamic to really keep an eye on, or I'm really keeping an eye on, to see if he fulfills on that promise, because he definitely campaigned on that. The finalized rule, I didn't say this during the presentation, but for the most part, no one likes it. I mean, not the banks, not the advocates, not the developers. I mean, there are very few people who like it. The political the implementation of it takes several years, so it's not going to go into effect for at least 2 more years, if not 3. So a lot can happen.
Do you think that you were talking about the list kind of things that that could potentially qualify as, CRA for CRA credits and whatnot? Do you think that is something, and I know you don't have a crystal ball, but is something that will go into place?
That's a good question. The OCC has that in place. Throughout, I'll just say this, in my conversations with the Federal Reserve throughout the OCC's process, this was over a year ago, the Federal Reserve was not a fan of this idea of a list, at least from the people I talked to. And then when it popped up in the ANPR, I was a little bit surprised. The ANPR, like I said, it's there to ask questions, and it asks, should we do a list? That's what they asked. And so maybe they're just, I got to take them at what they say. They're asking questions, should they or shouldn't they? And so we'll see. I hope not. I don't know. I hope not.
Is it, and this is reaching way back into the recesses of my mind for things that I've kind of forgotten over time, but is it that the OCC regulates like the big banks, the national banks, and then the Federal Reserve? I don't know. See, I'm already falling apart, but
basically, yeah. Yep, the OCC has the big ones. The Federal Reserve has, and actually, yeah, the OCC has the big banks and regulates, I think, what was the number? I think it was about 70% of all CRA-related dollars that are invested and examined every year. Or sorry, every 3 years or so. So they're the big agency. They're headed by a political appointment, as we just talked about. So they have the biggest banks. They tend to be the lead agency, but they have this political head, which makes them a little more sensitive to the political winds. They just passed a rule, and Biden can appoint someone and totally get rid of it, right? The Federal Reserve isn't exactly structured that way. They tend to be the more deliberative body, or this is their reputation, more deliberative, more thoughtful, but they can take forever to do stuff. So we'll see. We'll see.
That's definitely interesting. Does anybody? Oh, go ahead, Alex.
Yeah, I'm going to jump in. I have a question for you, Mallory. We have a number of folks on the call that are from South King County, and especially from some of the municipalities in South King County. Can you kind of give a sneak preview or give us some idea of projects that may be going on in South King County?
Yeah, a couple
homestead projects are taking root in South King County, Habitat for Humanity as well, so affordable home ownership. I think in Tukwila, Homestead has a substantial amount of townhomes that they're building, also in Renton on the Renton Highlands property. And I think, you know, a lot of those are directly partnered with municipalities. So Renton's been very involved. I suspect Tukwila has been as well. The city of Burien is running an affordable housing demonstration project right now with Habitat for Humanity. It's going to also be affordable home ownership, and the city has really outlined some ambitious plans. They've developed a housing action plan, and they're in the process of refining it to really look at the goals and local tools and policies that they have in their tool belt to increase local affordability. So I will also say candidly that we on our policy team have kind of a geographic split. So I primarily focus on East King County, North King County, and some Seattle issues and projects. So I get to hear about the awesome things that South King County is doing, but it's not my exact wheelhouse, but I do have a little bit more familiarity with some other corners, which just don't pertain to CRA, because those are not very much, very heavily concentrated as far as CRA eligibility goes. So.
Is that because of where they're located?
It's because of their affluence. A lot of them are higher income census tracts, and yeah, so on the east side, there's a concentration of affluence, and there are still folks that are living in poverty on the east side, and they kind of just an interesting, challenging reality of trying to find housing where in the highest, most expensive market in the entirety of Seattle, King County, in East King County, so.
That's it, yeah, that's too bad. I mean, it's good what you're working on. It's just too bad that that's the hard part, is trying to capture everybody.
So, Mallory, in the same vein, I know your concentration isn't necessarily Eastern Washington, but thinking of our rural communities and housing needs there, I think sometimes, you know, we tend to be a little bit Seattle King County centric. And so I want to make sure that for those who are on the call who are from, you know, Eastern Washington, other areas, and specifically our rural communities, who might they contact and how might they learn more about what's going on in their communities? And possibly they already know, but just any information for the good of the order.
Thank you, Alice. That's an excellent question. So we do have 5 affordable housing consortia over in Spokane, and all of Spokane County is served by the Spokane Low Income Housing Coalition. And so I would definitely reach out to the folks there. There's folks on staff that were previously on Spokane City Council. They're very aware of the local environment as far as those different policy tools go, funding tools and incentive buckets, all the things that go on to either produce or preserve housing in Spokane County. In Pierce County has an affordable housing consortia as well. So if you are operating in more of the rural corners of Pierce County, would definitely reach out to those folks. Whatcom County has a Whatcom Housing Alliance, and they are kind of similar in membership makeup as HDC, the HDC of King County. So they have a big tent of for-profit and nonprofit developers, municipalities, all sorts of folks that are community groups, advocacy groups, all kind of under one big umbrella. So the Washington Low Income Housing Alliance is also a really great resource if you're interested in state level issues. And they also have a program called the Resident Action Project, which is about getting folks with lived experience, navigating homelessness or housing insecurity, or living in subsidized housing and or providing services on site at subsidized housing to drive the legislative agenda of the Low Income Housing Alliance. So the Resident Action Project is a great group to get connected with because they are doing grassroots organizing in every pocket and every corner of Washington state. And their work really informs the work that the Housing Alliance does at the state level. And then I certainly would say, get on a Housing Alliance, Washington Low Income Housing Alliance listserv like today, so you know what's going on in the legislative session, because
it is moving fast, and we only have, I think, another month and a half or so before it closes. And there's some really historic investments that Governor Inslee has put into his proposed budgets for affordable housing, human service, homelessness services to decongregate shelters in response to COVID. It's the biggest, kind of boldest investment in housing and homelessness funding that we've ever seen from the governor. So stay tuned to the state legislature for sure, and contact your lawmakers if you support it.
Thank you so much, Mallory. And I just want to add too, you are a member of Frank's organization. So Frank also has a member organization at the national level. And so thank you both for being here. I want to leave with one thought, because as we're talking about housing, and of course that is a huge issue, what can organizations do to help prepare their clients? So they're in the nonprofit world, they're helping people move along a financial continuum. And so looking at how do they prep their clients to get to the point where they can access the community land trust projects, the projects that are out there.
Well, I think that we have a lot of membership overlap, and I previously worked with one of the organizations that is a member of the Financial Empowerment Network in Washington. And so I'm coming at it, I guess, from that perspective of working with clients and essentially introducing them to the world of banking services, shifting from paying for rent with cashier's checks and kind of unsustainable methods of navigating your finances. So I think getting folks banked, like you all do, getting them familiar with banks, with credit unions, different financial institutions, so that they can build in some sort of credit record with the financial institution to then, when they get to the point where they're contributing to it, a checking account, a savings account, to stay tuned to land trust websites, because you can sign up for alerts when they have new homes that are available. You can complete applications. They will walk you through the entirety of the process. And then for rental housing, it's also critically important there's some sort of credit to be verified. So building credit with folks, whether that's opening, an initial small balance credit card account, is really critical. So
we have a question from Susan to put the link in the chat. I'm not sure which link.
I think it
is it
for the land trust.
It might be. Yeah, that's what she said, the land trust. Yep.
Okay.
Perfect. Well, thank you both very, very much. This has been really, really informative and exciting too. It gives you a whole new way to view what's going on in terms of our community and the development out there and the housing opportunities, and where maybe we need to focus some attention, or how we can work together with that too. And I really like, Mallory, what you said about, getting involved in the legislative process. I mean, I'm in the legislative process, and I didn't even realize these bills, like you're talking about, were up and, flying. So I think it's great. I really appreciate it very much. Thank you.
Thank you. Thank you all so much.
Thanks.
I will send.
Oh, sorry.
Go ahead, Frank.
Oh, I was saying, thanks so much. This was a lot of fun.
Yeah.
Oh, good. I'm glad. I know. I might have to hit you up because I've got all kinds of questions, Frank. But
I'll learn out with you anytime, Becky, anytime.
Thank you.
I will put links in, send them either your way, Becky, or Alice, for
sure, that's perfect.
Trust kind of available list notifications. And yeah, thank you all so much. Lovely to be here with you today.
Awesome. Thank you.
Oh, no, I was just going to say thank you so much for being here. And for the audience, we will have the recording available early next week, as well as the PowerPoints and all the links. So stay tuned. That information will be coming. Thank you again, everyone.